Well, welcome back everybody, your typical bull here, and today I want to talk about the volume weighted average price for the VWAP, and specifically how to day trade and take some popular setups with the VWAP. So right now we are looking at NEO. Basically, this is going to be used mostly like a support and resistance slide. A general consensus is that below the VWAP you are bearish and above the VWAP you are bullish. And if you combine this with some other chart patterns and things of that nature, you will be able to take some very profitable trades. So right now we're looking at NEO. Here is kind of the first setup I want to talk about. You see price, let me delete this. You see price opens up sort of sideways here on this 1 minute chart, and in the first couple hours of market open I'm going to be primarily looking at the 1 minute chart, and then after that first initial couple hours of violent price action, me personally, I'm going to swap over to the 5 minute chart. So that's because if you see the first couple hours of market open, this doesn't really look as clear as it would on the 1 minute chart. And then past that into the lunchtime hours around in there, you start getting some 5 minute setups as opposed to those 1 minute setups, and the price action is more clear on a 5 minute chart to make up for the decreased volume as the day goes on. And you'll get more follow throughs on a 5 minute later in the day. From my personal experience, you can use the 1 minute all day, and this rule does have exceptions for things that are trading at very high volume levels. SPY is a good one that you can pretty well trade excuse me, on a 1 minute chart all day long, but for the most part, normal market conditions, 1 minute chart for the first couple hours, 5 minute chart for the later hours of the day. So back to NEO here in this setup. So this setup here, you notice we're opening, we're chopping around a little bit, we're creating a little bit of a chart pattern here, right? We have sort of this little triangle pattern forming, and we're consolidating below VWAP. Every time we pop up to that VWAP, we're rejecting the underside of that. So you can get short anywhere in here if you wanted to, but if you are a more conservative trader, you would want to wait until this price pattern breaks, which happens here. You break this pivot low, you break this trend line low. So basically, essentially, you break down from this triangle, and even without the VWAP, this is still a valid pattern. But the VWAP gives you that added confirmation as well. If you look down here at the volume on that breakout, this volume bar is much larger than it would be if you on these other volume bars, this choppy market action, right? So that is another confirmation of this move. You have this big volume print on this breakdown, and then you get a couple of candles here that are just kind of trending sideways, but that right there, that candle, that's the go signal. So at this point, the trade that you would be looking at is a short or a put option, right? Let me get my little box here. So the put option right here, right? So the entry is this breakdown, this big volume bar, and stop losses are above VWAP. So you get back above VWAP, you're out. So the risk is this. So now, how do we get our target? How do you know when this move is going to turn around? There's a couple of ways we can do this. We could do this on the candle to break this sort of trend here, and this is more personal preference than anything. So if you were doing this just strictly from the price action, these candles here are still technically trending down. You don't get an exit until here. So what you would end up getting at this point is there's the exit on this third candle here that pops this, right? So what you would end up getting is an entry at 2160, 2170-ish, and your exit is around $21 even, right? So that also happens to be a whole dollar. You could use, me personally, what I like to do is have targets based on my hourly time frame, right? So if you look back from this day we're looking at here is right here on 302. So what we notice is that on this day, that is where a strong rally has started. So this is a pretty significant level 2 days ago, that is a valid price target, and that's how I personally find my targets. So I use a combination of price action and support and resistance levels. So at this point I would exit the trade. So what we end up with is this trade here, and you end up getting better targets, but it's not much better, right? So either of these ways is going to be functional, and as you grow and learn to better understand price action, this is going to be easier for you personally. So another way that you can scale out of these trades is get to a point where you're at 1 times your risk and then take off half of your position, or take off half of it at a certain percentage. Like let's say 25% you take off 1 of 4 contracts, 50% you take off another, 75% you take off another, and 100% you're done. Or you can scale out a half and then at a certain percentage let another 25% off, and then let the rest of them run until you get stopped out at a certain price level, or things of that nature. You'll learn how to handle that as you go. Price action is probably the most advanced way, right? So like here, this is a bullish kind of reversal pattern. This little 3 candle pop right here, you see you make this little V shape pattern, right? In that pattern actually confirms on this 3rd candle that makes a high above this candle, right? So you get that confirmation. So you would exit this trade here, and it doesn't actually, it actually goes just a touch lower, but it doesn't go much lower than this level here, right? So there's just different ways you can handle these trades, right? So it's important, even when trading with a VWAP, to mark out significant levels on higher time frames, right? So these significant support and resistance levels and these significant pivots are important to mark out. Like, so this pivot here, a very strong price rally happened from this location before, but that's already been traded through, so that's no longer a valid level in my opinion, right? So right here, that's a significant pivot. Right here is a significant level, right? This was an open, and you had a strong rally from that open, and again you have a strong rally from that open. And that kind of brings me into my next setup here. When you get very far from the VWAP, you can generally take a contrary position, right? So this is sort of a level that is formed intraday, right? On the 1 minute chart, you see it. There's a very bounce, 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 bounce. So this bounces from this level 1 to the 3rd time, right? Then you get this same thing. You get this sort of V-shaped reversal pattern. So from this point, this candle here makes a new high to cross above that. You can take a trade based off of this to the VWAP with a target at VWAP, right? So what you get in this scenario is this trade, with the risk being here and targets being here. So that is sort of a contrary trade. And this is another one. This one itself wouldn't have specifically worked out, but you could have taken that trade, right? So it would have gotten quite all the way to VWAP. So this is a point where scaling out is a better sort of way to handle this, right? So in this situation specifically, using your price action, this is a very bearish candle, and right here that bearish reversal sort of confirms. So what you could have gotten is either a small gain out of this or a break-even trade if you scale out of half at your 1 times risk, because this is essentially about a 1 times risk trade, right? So, and then again, that same trade this 2nd time, when you make that same sort of V-shaped reversal pattern, you do get a VWAP target here, right? So notice how price keeps rejecting the VWAP intraday, and it doesn't quite make any significant up movement until you actually get above that VWAP and hold that, right? So in here I would be looking at a 5-minute chart, of course, but see on the 5-minute chart, this rejects VWAP pretty hard right here, right? And then it doesn't actually make any significant movements until that VWAP pops above and actually holds, right? So what you get here is above VWAP, you sort of consolidating here sideways, right? And you're not really making any movement, but you are above the VWAP. So there's not really a valid setup to be taken here, but you could argue that this candle would be that valid setup. But me personally, this isn't as clear for me, right? So I wouldn't mess with this. But even the price movement from this location isn't a very significant one. So this isn't very well a valid trade. You could argue here that this would be a valid short trade and you would take a stop loss, which is not a big deal. It just happens that way sometimes. But essentially this would be a valid VWAP trade here. You get this push above and then this strong rejection, and that candle pattern does actually confirm here. But if you think about it, really, if you had taken both of these trades, from here you make this much, and then from here you're only going to lose this much, right? Or, you know, if you're using your price action, when you notice that move isn't following through, you can get out at break even or a small loss, and it's not essentially a big deal at all whatsoever, right? So this pattern isn't following through, so go ahead and get out. It's not a big deal. So let's look at some other trades here, and we'll look at some other chart tickers as well. So right here's another good one. You get this strong rally into open, and then a price that quickly shoves back down under VWAP, and then this 1 minute candle here pushes up to VWAP, right? So you trade through here, then you push back up into VWAP, right? Boom. And then right here, when you start to reject that again, you could take a low risk trade either one of two ways. So here, and then use this pivot low here as a target, or any of these pivots created in the pre-market, right? So like this one's a good one. Again, this is another kind of price action deal. Here steady, you're trading down from this point, and then you break that trend line here. So at that point you would get a 22.70 down to about 22.20, so about 50 cents there. Or use your intraday levels, right? So like let's say a 5 minute candle makes a new high, right? So where did we go here? So from that VWAP trade here to sort of like this candle, this is like a doji indecision candle on a 5 minute chart, and then you cross above that close there. So that's another way. So this, in this scenario, you'd get a 22.13, and then again 5 minute candles here. So like this trade specifically, indecision candle, you can either get out right here, this indecision candle, you've made a good profit. You went from 22.70 down to 22.09, right? So you made 70 cents there. It's a good trade. And then you pop back up here. So this would be a valid, essentially a valid long setup here, but that doesn't follow through. But essentially your risk is this. So at this point you've made this trade already. So you give back a little bit of that here. And at this point, when you trade back through VWAP, you start consolidating underneath of that VWAP on this candle here, you get another valid setup to the short side, right? So you get this, and then it confirms there, 22.30, and then again you have this pivot low down here, 21.80. So right here, 21.84 pivot low exactly. So then you make another good solid trade with this VWAP here. Right, and then you don't get another valid trade until this. You pop just above VWAP, you reject that trade hard again in a very strong reversal pattern. So at this point, towards the end of the day, you do get that almost that exact same trade again off of VWAP, right? So the risk in this scenario has to be above this, right? So this candle confirms, and then again, it's almost close to the end of the day. So pop this little short quick trade there again, right? So. And then again, here's one to the long side. You're trading in this choppy sort of action here. Let's go back to our 1 minute, right? So 3 days in a row, same ticker, you have these valid setups based off of your VWAP, right? This is another sort of price action deal, right? You get this huge strong pop up into open, and then you reject very strongly, and then at this point you create sort of a demand zone intraday, right? Like right in this area you create this level, and then you pop above this VWAP again, volume picks up a little bit on this huge candle, and then you get sort of this little pattern here, right? You're consolidating very tightly, you're above your VWAP, and then you get this breakout of this pattern, and then 3 candles later you get that strong confirmation, right? So pop, there's the little pop there, you break your pattern, and you also on this 3rd candle here you break high of day. But if you're using these patterns, you're already bullish because you're above VWAP, and then what you get is a trade here essentially would be the stop, and then you're monitoring high of day here, and then what you get is a trade you definitely need to monitor with your price action, right? So swap on over to a 5-minute chart because we are getting kind of late into the day, and what we essentially get is a trade bullish above VWAP. We got in right here, and we don't actually create a new 5-minute low until this point here. So right here, the 5-minute candle, we are starting to consolidate on our chart. 5-minute candle makes a new low right here. Volume picks up. So essentially anywhere in this candle, what we get is a trade from here to somewhere in this range here. So somewhere between 22.27 to 22.90, or around in 22.70. So we get 50 cents or better out of that, and that's another good trade. And then again, same sort of pattern, we start consolidating above the VWAP. We actually don't ever get really any follow through on this trade again until the end of the day. But if you are strictly from a scalping sort of perspective here, you get another little quick trade here off of the VWAP. You pop down to VWAP, pop right back up to this intraday resistance level that we formed. That's 22.29 to 22.70. So 50 cents off of that trade. Exact same trade here, 22.30 this time to 22.70. So these are quick little scalp plays here, and at any time this pops back below VWAP, you just stop out and you're finished. Let's go back on another. So here's another one. So right at open here, again, same thing. This is one you wouldn't catch unless you're on a 1-minute chart. You've got this sort of pre-market range, right? And what you see here is that right in the pre-market, right, you've got this range, right? You form that in the first few minutes of market open, and then you pop above VWAP. You don't actually break that range, right? So there's no entry to the long side here, but you are above VWAP, and then you reject VWAP very strongly on a huge volume candle, and you close below that range, and then this next candle follows through and confirms. So anywhere on this candle, what you get is a quick pop up to the VWAP here, right? And it exactly retests that range. So at that specific point, you get a very low risk trade from VWAP. And depending on where you get in, let's just assume you don't have super quick fingers, right? So you get in right here, and you give it just a little wiggle room. So what you get essentially is this trade, and you don't make that new kind of high until I'd say probably right in here in this area, 2060-ish. So you get in from 21.24 down to 20.50. So that's a pretty good trade there. And then again, Here's another VWAP rejection at this point here. See, you pop up into the VWAP, you reject that VWAP, and then you have an intraday level here to trade based on, right? So what you get in this scenario is this trade here from there to this intraday resistance level, quick little trade, and then later in the day you could argue a valid setup here, a quick little scalp trade, you pop above VWAP, and then, but again, notice how this doesn't follow through. We're getting late in the day, volumes calming down. On our 5-minute chart, this is going to look different, right? So same day here. This is a very strong sell-off on a bearish day, right? So, but what you get, if you're looking specifically at your 5-minute chart, you don't make a new 5-minute high until this level. But later in the day, you don't get those follow-throughs. You could argue essentially that this would be a good rejection VWAP trade, and it would be if from a scalping perspective. So what you get is 2060 to 20, yeah, see, it's not a very big trade, 2060 to 2080, about 20 cents, but you start consolidating and it's very telegraphed that this isn't really going to follow through the way you think it is. So anyway, look at a couple more here. This is a VWAP trade that doesn't quite follow through at all until late in the day, right? So from a 5-minute perspective, you are above VWAP all day and you don't actually follow through anywhere until later in the day, but you get this sort of breakout, right? You notice into lunch we're steady scaling down on the volume, and then on this break of this line, right, you get this volume spike, and then it even retests that level, right? So you break out, pop up, and this late in the day you want confirmations like this. So what you get is you break out, you retrace back towards VWAP again, and almost exactly test sort of this breakout level, which would be in this level, and then you confirm that pattern again. So you get this trade here. You could take a quick scalp here from this, or just let this run, because you don't essentially get an exit until right here at the end of the day from 2030 to 2130. So you get around $1 there, right? Which is a stellar trade essentially. Anyway, I hope that this has helped you guys sort of understand the VWAP a little better. Please remember to like, subscribe, and comment. If you have any questions, post those below. And just remember to manage your risk and keep an eye on your volume bars. They're super important. Cheers.